Kia ora, and welcome to the CoreLogic Property Market Update for Mahuru 2022. The property market continues to tick over, with an estimated 5,200 sales in August. Below the long-term average for August, but proving deals are still being done. As is normally the case when sales are relatively subdued, so too are property values. In fact, the CoreLogic House Price Index showed a 1.8% monthly fall in August, the largest monthly decline on record, back to 2003. The falls have been widespread across the country, with Auckland, Wellington and Dunedin showing particular weakness, each seeing values decline 2% or more over the month. Meanwhile, the patterns have also been mixed for the various buyer groups. In terms of market share, first home buyers have actually shown signs of a rebound in recent months, accounting for nearly 25% of purchases in August, their highest presence in 4 to 5 months. It's still too early to say they're confidently back in the market, but this shows there are signs they're looking beyond the pure financials of buying in a falling market, and are perhaps being helped out by the increased assistance from the government, with things like the price cap for the first home grant being raised in May. The restrained credit environment remains an issue for mortgaged multiple property owners, with 40% deposits still required and the availability of high debt-to-income loans also tight. Clearly, in a world of low gross rental yields and higher mortgage rates, the ability to actually purchase a property, let alone run it profitably, has been reduced. It must also be noted, however, that existing property investors aren't selling off to any noticeable degree though. At the same time, cash multiple property owners have seen their market share trend higher, while movers are trending lower. The premium required to trade up from a 3-bedroom to 4-bedroom property has fallen in some areas, but it remains high. That may be keeping some would-be movers where they are. While weaker housing market conditions are creating some opportunities to trade up, upgraders who need to sell before they buy could face some challenges amidst higher stock levels and less buyer demand. This juxtaposition could be curtailing upgrading or downsizing activity. Focusing back on investors, there are 2 key factors of interest: migration and rental prices. In recent months, net migration has remained negative, driven in no small part by net losses of Kiwi citizens. Not a great help for skills shortages in our economy or underlying property demand. On that note, with younger people heading offshore and more rental listings coming on stream, we're now clearly seeing the long-awaited slowdown in rents. Annual growth dipped below 4% in the year to August, the slowest since April last year. And in all likelihood, a reversion back to the long-term average of 3 to 4% per annum. Limited rental growth is yet another challenge for investors to navigate. So where might we be headed? For now, the momentum in property values is certainly downwards. However, the next phase to watch for might well be a slowdown in the rate of falls, setting the scene for an eventual floor, potentially in the first half of next year. After all, affordability has improved a little, mortgage rates may be very close to a peak, and with unemployment set to stay low, there are signs that many households could have already adjusted to the new norm for their finances. In the new build sector, the recent government announcement of the Build Ready Development Pathway to support stalled construction will be welcome news to a nervous industry anticipating a slowdown but not a full-on bust. Indeed, new dwelling consents have started to drop, albeit only slightly, but builders will still be busy with their existing pipelines for a while yet. In other words, although outright oversupply seems unlikely, nor is it likely that house building is going to drop to the depths of the last bust cycle, when consents fell to only 13,200 in the year to the end of July 2011. Perhaps the perfect way of summing up the mood at the recent Master Builders Association annual conference was cautiously optimistic. As ever, spring will be a fascinating time in the property market. A flurry of new listings seems unlikely, and some vendors may delist too. But with sales still low and slow, there will remain plenty of choice for buyers, putting pricing power in their hands for a while yet. Make sure you keep across all the latest updates by following CoreLogic New Zealand on LinkedIn, Twitter, Facebook or Instagram, and subscribing to the New Zealand Property Market Podcast, released every Monday afternoon. Mā te wā.